Mr. Subham Thakal is a financial derivative specialist in Ceylon and has recently visited his hometown Zappa on the occasion of the Dasai festival. The garlic farmers from Zappa are stressed out due to the crops being damaged by the weather.
Hello everyone, how are you all doing?
We are in big loss, Subham. If this continues, we'll have no more income left to survive.
Can you share with me what actually happened? I can help.
Main problem is that our crops get wiped out by the bad weather every year. We fear the same might happen in the years to come as well. What can we do to minimize this risk?
It's so easy. You can hedge such risk with the help of derivatives.
What's that?
Derivatives are financial instruments whose prices are derived from the prices of their underlying assets. These underlying assets could be commodities, equities, currencies, interest rates, etc.
Is derivatives really possible in hedging the risk in our case?
If you think that the bad weather could wipe out the garlic, you can use the derivative instrument by entering into a long position in the forward contract to hedge the price risk.
How are we not aware of such a system? Since when has this been practicing in Nepal?
The history of the derivatives market in Nepal started in 2006 AD with the establishment of Commodity and Metal Exchange Nepal Limited. The practice started with a futures contract to help agricultural producers and consumers manage the price risk. Currently, 8 exchanges and more than 200 registered brokerage firms have been trading actively in the future market of Nepal.
Can we know about the derivative instruments and which commodities are traded in the derivatives market of Nepal?
There are 4 types of derivative instruments: forward, futures, options, and swaps. Apart from options, all the 3 instruments are practiced in Nepal through commodity exchanges or commercial banks. There are also several commodities listed in the exchanges in Nepal: agricultural products such as cardamom, cotton, precious metals such as gold and silver, other metals such as aluminium, steel. Similarly, minerals such as crude oil, petroleum products, and commodities such as sugar, tea, coffee, and herbs.
Is it interesting to know that a lot of commodities have been listed by the authorities? But are these markets properly regulated?
Miss Gautam, one of the villagers, after seeing the crowd, comes to see what is happening and keep observing the discussion between farmers and Mr. Dakal from behind.
Also, can you tell me who are the parties involved and how do the markets operate?
Though the derivatives market in Nepal started its operation since 2007, the government has been involved only since 2017 with the Commodities Exchange Market Act and rules. This new legislation aims to supervise, regulate, and develop the derivatives market, including the regulations of commodities transactions, clearance and settlement, warehouse operation, commodity brokers, and protects the interests of investors as one of its key objectives. There are also penalties for offenses and non-compliance against this act. SEVON is the regulatory body which looks after this. There are 4 parties that operate in the market. They are the exchanges, clearing house, brokers, and sub-brokers and traders. Commodities Exchange Act 2074 requires all these related parties to obtain license before operating any trading activities. Similarly, a minimum paid of capital for Rs 500 million is required to operate the commodity exchange market.
I'm an active investor in the stock market of Nepal for the past 3 years. Listening to your overview, I'm interested to invest my this year's Dasai allowance in the derivatives market and want to know further about the present scenario of derivative market in Nepal.
Compared with the stock market of Nepal, the derivatives market is more versatile because of services such as 24-hour trading platform and margin trading. The scope is also wider in the derivatives market as it captures many participants, the importers, exporters, farmers, and traders, whereas the stock market only targets the traders. That said, the risk is also higher in the derivatives market if anyone enters without any knowledge or analytic capabilities. The derivative market of Nepal is in an infant stage. Out of the 4 derivatives instruments, forward and future contracts in commodities have been being practiced for a long time. All commercial banks in Nepal practice forward contracts, mostly in currency with non-deliverable forward contracts. In the current COVID situation, few commercial banks including Rashtriya Vanijya Bank, Nepal Bank, and Agricultural Development Bank have used credit swaps. In the commodity market, over 90% of the investors are found to be speculating rather than hedging their risk. Hence, extensive positive impact in the economy has not been received yet. The commodity price in Nepal is set on products priced based on international exchange, as there is no price discovery in our market. The frequently traded commodities in Nepal are gold, copper, crude oil, soybean, coffee, etc. These commodities also do not have physical delivery in practice and are settled only in cash. Despite these practices, the Nepalese commodity market follows traditional structure with less involvement of technology and has numerous problems in the transparency of price information, valuation, and the supply chain. The regulation have not recognized that there are already registered exchanges who are provided commodity exchange services to the clients. The mechanisms to verify the quality of goods are also missing. Though some universities offer suitable finance courses related to derivative markets, there is a lack of financial experts who are able to work in this field. Likewise, there is also a lack of resources such as warehouses and third-party warehouse management. The bylaws, directives, and other regulation have also not been introduced for smooth functioning of these markets, and even after 3 years of Commodity Exchange Act, no exchange has been able to obtain a license yet. The market also lacks a proper quality control mechanism for the product standardization that trace through the commodity exchanges.
What are the prospects for the future?
After the new act and regulation, we can expect the derivative market to be more systematic and managed in the days ahead. This could be of huge benefit to commodity producers like farmers, who can get the right price and assurance for their products, since there could be more price discovery. Hence, the market can also eliminate unnecessary fluctuations in price. The local products and commodities of the country will also get promoted, that helps the national economy and stakeholders involved. Scientific pricing mechanism should be regulated by SEBON to encourage more hedging rather than speculation. There is also a need for proper awareness and education among the stakeholders for smooth operation of the market.
After the discussion, farmers were really very happy and thanked Mr. Subham for making them aware about the derivative market in Nepal. From this discussion, we came to know that derivative market has a crucial role in uplifting the economic condition of Nepal. Government can also earn more tax revenue. The trading of standardized and graded commodity helps to bring quality products in the market that protects the consumer rights and controls the inflation. The agro industry can take advantage of the standard warehousing stores available in the market. It is also a mechanism for risk management, as growers, traders, exporters, importers can ensure their risks from the fluctuating product prices by taking future positions. Financial institutions can also mitigate the currency, interest rate, or credit risk through the derivatives. Commodity derivatives reduces the volatility in the spot market by increasing information flows in the market and thus influencing the production, storage decisions and reducing the spot price volatility. Development of commodity derivatives such as futures and options in Nepal help in production planning and marketing, which enables the agricultural companies to secure the price of agricultural products prior to the harvest. The overall production and trade volume increases, lowering the interest rates on loans. Therefore, the derivative market would help farmers, the middlemen, and companies to better understand, manage, and adapt to the future market trends. Enforcement of the Act has made participants optimistic about the derivative market. The awareness has also increased as brokers and exchange companies are regularly providing trainings and seminars. With the paid-up capital of Rs 500 million for licensing the exchange, people are hopeful for a well-regulated market and transparency. Locally available agricultural commodities and resources can also get benefited with the derivatives market in the future. The banks and financial institutions can also be attracted in the derivative market as they face constant risks such as interest rate risk, exchange risk, credit risk, etc.